Tesla announced their record-breaking vehicle deliveries for the second quarter. The electric car manufacturer, led by billionaire Elon Musk.
In 7 days, the car market won't look anything like it does right now. Elon Musk just dropped a warning. And it's not hype. Policies, prices, and power are shifting so fast that the car in your driveway could lose value overnight. And it's not just Tesla owners on the line. So what's about to crash? Who's scrambling to stop it? And how does it hit your payments and resale value? 7 days? Elon Musk has hinted that a breakthrough is coming, something so disruptive that it could rip up every expectation you've had about the auto industry. This isn't about waiting for the future. The future is being delivered on a countdown clock, and the timer is already ticking. For years, Tesla has framed itself as the brand that shapes tomorrow. But now the urgency feels different, almost desperate. This isn't hype for the sake of headlines. It's a warning that the rules of the road, the rules of business, and even the rules of ownership are about to bend. Imagine a sudden flip where the value of your car isn't in its horsepower or price tag, but in how it connects, updates, and competes in a marketplace running on new fuel, software, data, and control. 7 days may not sound like much, but in markets built on perception and timing, it's an eternity. Musk isn't just teasing a product. He's signaling a reset. And the truth is, when the reset lands, most drivers won't even realize they're already playing by new rules. But what's really forcing this urgency isn't just innovation. It's Tesla's growing weakness, the stat. For the first time since 2017, Tesla's share of the American electric vehicle market has fallen below 40%. That statistic, buried inside quarterly reports, explains more than any dramatic teaser. A company that once controlled more than half of all electric vehicle sales now finds itself in retreat. Every lost percentage point represents customers buying elsewhere, choosing cheaper Chinese imports or attractive financing from legacy automakers. General Motors, Ford, Hyundai, and Volkswagen have all sharpened their knives. They offer zero-interest loans, extended warranties, and free charging perks. Competitors know Tesla's brand aura is fading and are moving quickly to capture disillusioned buyers. For Musk, who built Tesla on the narrative of inevitability, shrinking market share is more dangerous than falling profits. Profits fluctuate, but once dominance slips, the perception of leadership vanishes. For customers, that decline is not an abstract number. It is the silent signal that choice has multiplied. A buyer once funneled almost automatically toward Tesla now pauses, compares, and often finds a rival offering better financing or faster delivery. Market share loss is not just a chart, it is erosion of inevitability. Inside Tesla's boardrooms, this decline forces a calculation. The company cannot afford to look defensive. It must appear bold, disruptive, and untouchable. And that is why Musk reaches again for a weapon he has used many times before, the stage. And when dominance fades, Musk reaches for his favorite weapon, spectacle. The demo game. Musk's career has been built on spectacle. He knows that a dazzling reveal can overshadow disappointing financials or eroding market share. Investors have short memories when the stage lights blind them. That is why speculation swirls over what Tesla could show in the coming week. One possibility is a robo-taxi milestone. Autonomous driving has long been Musk's holy grail, promising to turn every Tesla into a revenue-generating fleet vehicle. A credible demonstration, even if limited, could reignite investor excitement. Another option is Optimus, the humanoid robot Musk has described as Tesla's future beyond cars. A functional prototype, even if clumsy, would reinforce the narrative that Tesla is not merely an automaker, but a platform for artificial intelligence. The third possibility is a mass market model, something cheaper, smaller, and aimed directly at consumers priced out of current Teslas. Even a hint at such a product could freeze demand for competitors and reposition Tesla at the center of affordability. Each scenario has risks. Overpromise and underdeliver, and Tesla deepens skepticism. But if the reveal is strong enough, it resets the entire conversation. The question is not whether Musk will put on a show. The question is whether the show will matter in a week when the rules of global trade are being rewritten. But even spectacle means nothing if policy detonates prices first. The policy bomb. The countdown is not just theatrical. In Washington, Brussels, and Mexico City, policy deadlines arrive within days. The United States has raised tariffs on Chinese electric vehicles to 100%. The European Union is finalizing countervailing duties that could climb toward 40%. And Mexico, a country Tesla counts on for future assembly, is preparing a proposal for a 50% tariff wall against Chinese imports. These numbers are not abstract. They land on order sheets, contracts, and shipping invoices within a single week. Tariffs alter the market instantly. A car that was affordable yesterday becomes overpriced tomorrow. Dealers scramble to clear inventory before rules change. Consumers hesitate, worried that a purchase today will lose value when new tariffs arrive. In this environment, a 7-day teaser aligns not with marketing, but with policy reality. Musk is not just building anticipation. He is racing against a calendar set by governments. For families, these tariffs land not as policy jargon, but as price shocks. A model that seemed affordable last weekend may climb out of reach by the next. Car shopping turns into a race against deadlines, where hesitation costs thousands, and quick decisions determine whether dreams remain parked or purchased. The implication is profound. Tesla's big reveal may not be about showcasing technology at all. It may be about framing Tesla as resilient in the face of policy shocks, while competitors stumble. But the truth is that tariffs do not end the game. They simply change the map. When blocked in one region, China does not retreat. It reroutes. And once tariffs hit, China does not retreat. It reroutes. Built in your backyard. When tariffs close one door, industry builds another. Chinese automakers, led by BYD, have begun planting factories inside Europe's borders, a move designed to dodge the very trade barriers meant to block them. In Hungary, in Turkey, and in whispers across Eastern Europe, new assembly plants rise with quiet speed. These are not just symbolic projects. They represent a strategic rerouting of the global electric vehicle supply chain. By building inside tariff walls, Chinese companies convert Europe's protections into their own advantages. The tactic is ingenious. European consumers still want affordable electric cars, and domestic automakers struggle to deliver them at scale. When a BYD plant opens in Hungary, it creates local jobs, satisfies political talking points, and at the same time bypasses the costs of shipping vehicles across oceans into tariff-heavy ports. Tariffs were designed to protect, yet they have incentivized foreign rivals to dig in deeper. For Tesla, this maneuver tightens the noose. It faces not only competition from imports, but now also from Chinese-branded cars produced in Europe itself. Factories no longer define national strength. Ownership and strategy do. The irony is unmistakable. In trying to block Chinese cars, Europe may have invited them in permanently, but the price war will not be fought in factories. It will be fought in software. If you're starting to realize how fast this shift is moving, hit like right now so more people wake up to it, and drop a comment with your take. Because the car market isn't just changing, it's changing for you. Your voice belongs in this conversation. The download discount? The old logic of car value was forged in steel. Bigger engines, sleeker designs, or lighter frames determined the sticker price. But in the electric vehicle era, value increasingly flows through lines of code. Tesla pioneered the over-the-air update, a mechanism that allows a car to become faster, safer, or more customized with nothing more than a digital patch. A vehicle's worth can shift overnight, not in a factory, but in a server room. This digital flexibility creates a new battlefield. Automakers can bundle software features the way tech companies bundle apps. A driver might pay extra for enhanced autopilot 1 month, then downgrade the next. Subscriptions for heated seats, performance boosts, or advanced safety layers are no longer science fiction. They are the margin levers of the 21st century. Tesla has already proven the model, but Chinese competitors are adopting it at breakneck speed, offering low-cost vehicles with optional software tiers that can dramatically expand profitability. For consumers, this creates a strange new reality. The same car in your driveway may not be worth the same tomorrow. A simple software update could raise its capabilities, or strip them away if a subscription lapses. Value is no longer fixed in metal, but floats on invisible code. The implications are unsettling. If cars can be repriced with code, then price wars no longer rely solely on materials or labor. They rely on software strategy. Discounts can be applied invisibly, overnight, across entire fleets. That level of agility is unprecedented in industrial history. Yet software only works if the chips inside can keep up. And that is where the squeeze begins. Silicon steering. No amount of software magic matters without the silicon that processes it. Modern electric vehicles depend on chips not only for infotainment, but for core driving functions, energy management, and autonomous navigation. Cars do not run on hope. They run on semiconductors. And right now, the semiconductor supply chain is stretched like a fraying rope. Export controls restrict advanced chip shipments to China, while global demand surges for artificial intelligence processors. Battery management systems compete with gaming consoles, smartphones, and data centers for the same scarce wafers. A single delayed shipment can stall an entire production line. Tesla knows this pain intimately, having slowed deliveries in past quarters due to chip shortages. Rivals face the same dilemma. The irony is that cars have become rolling computers, yet they compete against actual computers for parts. Minerals add another choke point. Lithium, cobalt, and rare earth elements remain vulnerable to geopolitical tensions. China dominates refining capacity, while Western governments scramble to secure alternative sources in Africa and South America. In this environment, one missed shipment of chips or minerals does not just delay cars, it reshapes delivery schedules, revenue projections, and consumer confidence. And while the chips choke, Wall Street has just sent its own warning shot. The market blink. Markets rarely move in sympathy. They move in calculation. In recent weeks, investors have begun to reprice Tesla not solely as an automaker, but as a hybrid between artificial intelligence platform and consumer hardware company. On one side, believers argue that Tesla's pivot toward autonomy, robotics, and software margins justifies higher valuations. On the other side, skeptics point to thinning automotive margins, rising competition, and execution risk. The result is volatility that mirrors the uncertainty of the entire sector. The timing is brutal. Musk's teased reveal lands precisely as markets debate whether Tesla deserves its tech-like multiples or should sink back to car company averages. A strong demo could ignite optimism, lifting not just Tesla, but the wider electric vehicle space. A weak or ambiguous reveal could do the opposite, sending shares sliding and emboldening rivals. For investors, this week is a stress test of conviction. Every tick of Tesla's stock becomes more than numbers on a screen. It is a public vote of confidence or doubt. When billions shift in minutes, that volatility bleeds into pension funds, retirement accounts, and household savings. A demo on stage suddenly feels like a referendum on financial futures. Yet beneath the noise of price targets and analyst notes lies a simpler truth. Markets can speculate, but they cannot build cars. The actual outcomes still depend on factories, workers, and the human element of production. That is the battlefield waiting in the next part of the story. But markets do not make cars, workers do, and they are about to push back. The factory countdown. For executives, a 7-day countdown is a headline. For workers on Tesla's factory floor in Austin or Fremont, it is exhaustion measured in hours. In the days leading up to a promised reveal, schedules twist without warning. Entire shifts are extended, workers are called in on rest days, and overtime mounts beyond anything sustainable. Managers push output targets higher each morning, only to revise them again by the afternoon. The stress is palpable. Workers report being shifted from one task to another with little explanation, as though the factory itself has been wired into Musk's own mood swings. A line worker might spend weeks mastering one component, only to be reassigned to a completely different role because leadership wants to accelerate a prototype or prep a batch of vehicles for show. The factory becomes less a workplace and more a stage set, where people exist to support the illusion of flawless readiness. Behind every shiny vehicle presented to investors or cameras lies an invisible cost. It is borne by employees who shoulder the unpredictable burdens of hype-driven deadlines. Musk's countdown may thrill Wall Street, but it frays the bodies and minds of those who make the countdown real. But workers are not alone. They have unions ready for a new fight. Bargaining with code. Traditional bargaining focused on wages, hours, and benefits. But as factories evolve into software-driven ecosystems, unions face a new frontier. How do you negotiate with an algorithm? Tesla workers whisper about scheduling systems that change shifts without explanation, performance metrics they cannot see, and quality audits conducted by machine vision rather than human supervisors. Unions are now demanding transparency. They want disclosure of how algorithms score workers, whether robotic systems are being tested to displace jobs, and what happens to data gathered from biometric sensors on the line. The stakes go beyond paychecks. If software can decide who is promoted, reassigned, or replaced, then labor rights extend into code. Collective bargaining has to evolve into digital bargaining. Workers describe the unease of being judged by systems they cannot see, a camera, a sensor, a hidden formula, all deciding performance with no chance to argue. For unions, the fight is not only for wages, but for dignity in a workplace where even silence may be scored. In Europe, where labor protections are stronger, unions are already pressing for laws that regulate algorithmic oversight. In the United States, the battle is less advanced but gathering momentum. Organizers argue that you cannot strike against a download, but you can demand accountability for how that download governs human effort. Tesla's push to automate everything collides directly with a renewed push for worker dignity. And just when unions stepped in, politicians pulled the handbrake. You've seen how deep this disruption cuts, but the next twist will be even bigger. Subscribe now so you don't miss the turn that everyone else will only understand too late. The one-page grenade. In politics, complexity hides in thick reports. But sometimes the most devastating blows arrive on a single page. That is what happened when tariff notices landed almost simultaneously in Washington, Brussels, and Mexico City. In the United States, Section 301 penalties raised duties on Chinese electric vehicles to 100%. In the European Union, countervailing duties targeted subsidies and threatened to climb past 30%. In Mexico, a sudden proposal to impose a 50% tariff wall on imports jolted the market. Each policy reads like dry bureaucracy, but for automakers, these are grenades tossed onto their balance sheets. Overnight, pricing models collapse. A car expected to retail at $35,000 in one market suddenly costs nearly $50,000. Consumers hesitate, dealers scramble, and multinational supply chains seize in confusion. Tesla faces this disruption on two fronts. It must navigate direct exposure to tariffs while convincing investors that its long-term strategy remains intact. Musk's solution, as ever, is to seize the narrative, to pivot attention away from policy pain and back toward technological vision. And at the very moment the rules tightened, Musk lit the demo stage. Spectacle or switch, the reveal finally arrived. Framed as the climax of Musk's 7-day tease, the stage shimmered, the lights blazed, and anticipation reached fever pitch. Would it be the long-awaited robotaxi prototype, the humanoid Optimus robot walking unassisted, or a hint of the affordable Model 2 designed to bring electric mobility to the masses? Each option carried different implications for Tesla's future. A robotaxi milestone would suggest Tesla is pushing hard into autonomy, gambling on software revenue streams rather than vehicle sales. An Optimus showcase would reinforce the idea of Tesla as an artificial intelligence company disguised as a car maker. A Model 2 teaser would strike at the heart of competitors by promising affordability that undercuts their business plans. Whatever appeared on stage, the meaning would ripple far beyond the applause. The atmosphere was electric, but beneath the cheers ran a quiet skepticism. Was this breakthrough genuine progress or just another promise stretched thin? The crowd wanted revolution, yet many feared illusion. In that instant, the line between future-shaping innovation and carefully staged theater had never felt more fragile. The question was whether spectacle alone could alter reality. Investors can be dazzled, but tariffs remain. Workers can cheer, but over time still burns them out. Rivals can pause, but their factories continue producing. For Tesla, this moment was less about unveiling hardware and more about resetting the storyline. But whether it landed or not, the shockwave rolled outward, fast. The counterpunch. Tesla's rivals know they do not need to win outright in the next 7 days. All they need to do is stall, to blunt the momentum of Musk's reveal and keep buyers hesitant. That is why, almost immediately after Musk teased a major announcement, competing automakers scrambled into action. General Motors extended zero-interest financing across select models. Ford expanded its plug-in hybrid lineup with generous lease options designed to sway cautious consumers. Volkswagen launched free charging perks across its European network. And BYD, never one to miss a strategic beat, introduced aggressive rebates in Asian and Latin American markets. This is the logic of counterpunching. No single offer topples Tesla, but together they create noise and doubt. If a family weighing an electric purchase suddenly sees lower monthly payments from Ford or a bundled service package from Volkswagen, the urgency to wait for Tesla diminishes. Musk thrives on the idea that consumers should pause for his reveal, but his rivals want those pauses redirected into their own showrooms. The timing matters. These countermeasures do not need to endure for years. They only need to sap Tesla's energy in the short window where spectacle could have reshaped demand. In other words, it is not about winning the war. It is about surviving the week. But rival offers are just skirmishes. The real fight is between blocks. The battery war. Beyond individual automakers, the real contest is geopolitical. The G7 nations still control legacy financial systems and set many of the global standards. But the BRICS alliance, Brazil, Russia, India, China, South Africa, and a widening circle of partners, now commands more than half the world's population and over 1/3 of global output. At the core of this rivalry is not just cars, but the minerals that make them possible. Lithium, cobalt, nickel, and rare earth elements form the arteries of electric mobility. China has spent decades securing refining dominance, while nations in the BRICS orbit supply raw material flows. The G7, meanwhile, leans on established trade agreements and technological expertise. The result is a mineral chessboard, where each bloc seeks leverage over the other. Whoever controls the battery chain controls the car market, and by extension, energy transition itself. Behind the statistics is a ruthless reality. Batteries are not just components, they are leverage. Every shipment of lithium or cobalt becomes a bargaining chip. Every new refinery a strategic fortress. Nations now treat mineral contracts the way past empires treated oil fields, vital territory in an unfolding economic war. This struggle transforms the auto industry into a proxy battlefield for larger questions of global power. Tariffs and subsidies become weapons, and supply chains double as political alliances. Musk's countdown lands at the center of this storm, but Tesla is only one piece in a much larger contest that will shape the next decade. And while blocks harden, portfolios start moving quietly. Portfolios in motion. For investors, 7 days can matter as much as 7 years. The week following Musk's reveal is a live experiment in conviction. If Tesla can show meaningful progress, whether in autonomy, robotics, or affordable mass models, analysts may justify its premium valuation as a tech platform rather than a simple automaker. If the reveal underwhelms, skepticism could return with force, dragging Tesla back toward the margins expected of a car company. Investors do not just watch products, they watch guidance. Delivery numbers, regional take rates, and hints at localization strategies become signals of whether Tesla can thrive under new tariffs and rising competition. Portfolios shift accordingly. Hedge funds trade volatility, pension funds reconsider exposure, and retail investors toggle between hope and fear with each headline. The demo is not just theater, it is a catalyst that shakes billions of dollars across global markets. The irony is stark. Musk sells a 7-day narrative to consumers, but it is investors who treat that week as a true deadline. Because in markets, hesitation costs money, and portfolios cannot afford to wait for 7 years of clarity. They react in real time. But beyond Wall Street, the real test is in your driveway. What it means now. For households, the shockwave is less about ticker symbols and more about immediate decisions. 7 days will not remake the global auto industry, but they can reshape your next 7 years of payments, insurance, and resale value. Consumers face a checklist. First, watch tariff deadlines. If you are considering a purchase, price shifts may land within days. Second, scan incentives. Competitors often roll out surprise discounts to steal Tesla's thunder, and those can represent real savings. Third, remember that software defines value now. Over-the-air features, subscription models, and digital perks may change the long-term cost of ownership. Finally, track resale signals. Cars depreciate differently when markets expect new models or features to land soon. For drivers, the countdown is not abstract policy. It is a decision waiting in the garage. Do you buy now, risking higher depreciation, or wait and gamble on incentives? The next 7 days may not rewrite history, but they can reshape your family budget for years to come. This is the practical fallout of Musk's countdown. It is not just about hype or politics. It is about the family deciding whether to buy today or hold off for another quarter. It is about the worker wondering whether tariffs will raise or lower demand in their town. It is about the investor checking not just their portfolio, but their garage. Because the next move will not come from a stage, it will come from policy dockets already waiting. What you've seen is only the surface of a market about to flip in ways most people won't catch until it's too late. If you want to stay ahead, hit like so this warning reaches more people. Comment with your take. I read everyone. And most importantly, subscribe right now. Because the next update isn't a headline, it's a turning point. Miss it, and you'll be the last to know what just happened.